That's the problem with traditional trade finance that crosses borders. Lack of trust between banking partners. What we've always preached about crypto, you don't need to understand the technology, you just need to trust that it works. Stablecoins are godsend. DeFi really popularized stablecoins. They haven't eliminated the banking at all, but it has opened up the ability to hit other markets. The landscape of payments hasn't really changed. 65% of transactions go by payments are still cash-based. Cash still remains king, sadly.
What's up, everyone? Welcome back to the Next Billion podcast. We're here talking to the entrepreneurs, the builders, the people that are actually building stuff for the world that's important, and how we can onboard the next billion people into crypto. I'm joined today via, I guess you'd call it the studio, after a great successful conference with one of my good friends, Kunbi Ogunleye. Kunbi, you were at the conference as well. Look, it's great to have you here on the podcast today.
Glad to be here, George.
Of course. What did you think of the conference? How was it? You came a long way, all the way to Turkey for our Crossroads conference.
Yeah, I loved it. The after party on Saturday was lit, as we say here in the United States. It was crazy. So, but on top, the speakers were really engaging. The crowd was very enthusiastic. And I thought it was the right length for a conference. A day and a half, very intense, and then spend the rest of the time partying. So I had a good time. Some of the other conferences I attend, it's like 3 days and not enough after party and too much of the speaker stuff. So I thought this was a good length. I thoroughly enjoyed it.
We thought about that when we were doing it, because you and I have both been to, so Kunbi and I, we go back however many years, I can't even remember, but
years right now, almost 10. Crazy, isn't it? Right? Yeah.
Yeah. Wow. Okay, that long. But so we've been to a lot of different conferences where everyone turns up on the first day, right? That's where everyone's pumped, and then by day 2, it's like, okay, like maybe people a little bit late after getting to the next stuff which is happening in the conference, and then by day 3 or something, I mean, you got 50% of the turnout. Everyone's tired, or they've been out late, or something like this, right? So yeah, I think one day, at least for our first foray into this world, is a good length of time, and it was pretty action-packed with everything there. So very glad that you could join us. But look, so for today, we're going to be talking about the world of payments a bit. And certainly for the Solana folks out there, we have a thing called Solana Pay. But we're actually going to talk a little bit broader than that today. We're going to be talking about remittances, how money moves around the world, and what better person than Kunbi, who's been running remittance companies for a long time now, to tell us about that. So Kunbi, I guess we can start off with, has payments in the world changed in the last 5 years? And what's missing, or what can be done better?
The landscape of payments hasn't really changed, despite the proliferation of different payment platforms. I mean, we can talk about in just the last 5 years alone, maybe even go back a little longer. You didn't have Apple Pay. You didn't have Google Pay. You certainly didn't have any of these QR to instantaneous pay. WeChat didn't exist maybe 7 years ago, right? All of these have come up in the last 7 years and, really exploded how people use, whether it's their phone or some sort of mobile device, to conduct payments. So that landscape seems to be very fundamentally altered. But when you peel the onion beneath that, the world still usually runs by cash. I hate to say this. It's still a very cash-based economy, because payments outside of the big institutional payments. So when you look at the numbers of the volume of transactions that go on, plus $1 million, 10, 20, a billion, that is still very much clunky. It goes by SWIFT, wire transfers. We don't see it. But the retail transactions, the small mom and pop meat and potato transactions, it's still a lot of them go by cash, which is very surprising to me. I still would have thought by 2023, particularly with the pandemic and people's fear of cash, that we would have seen some changes. But, that hasn't yet changed fundamentally. 65% of transactions that go by payments are still cash-based. So landscape looks different, but ultimately cash still remains king, sadly.
Sadly, or maybe that's a feature, not a bug. I don't know. And why is that, do you think? For a lot of countries in the world, a lot of people focus on WeChat and, these other big super apps or things like that. But WeChat isn't everywhere in the world, right? And not everyone has a PayPal, and not everyone has all these different things. And in fact, I think, as we both know, there's always a payment app local and specific to every country in the world, right? So is that maybe one of the reasons? Like, we actually don't have one global payment network. We literally have hundreds or thousands, perhaps.
Exactly. I think you've nailed it. The world, as these global brand names, WeChat, PayPal, Google Pay came out, people rushed to those platforms in the different countries they existed in. only to be found that they were gated out. You couldn't get in. I can't get onto WeChat unless I'm somehow situated in China and I have some sort of Chinese address to be linked to a SIM card. I don't have access to WeChat. So the 1.3 billion people who are using WeChat are literally ensconced in Greater China and Hong Kong and maybe a few sporadic places outside the world. The same applies with PayPal. So many people try to onboard on PayPal thinking this is very convenient, this is very easy, only to find that PayPal, whether it's Visa, MasterCard, or whomever, gates you out of your country, forcing this proliferation of micro payment channels. And that's why cash continues to exist. People are like, you know what, I tried to use PayPal, account was blocked, it was locked off, whatever, and you know what, I'm still going to use cash. And without that globalization, and I don't think it's going to happen because there are too many vested interests, both political, commercial, and regulatory, to prevent a global payment app from being that one size fits all. Because who's going to be behind it? Is it going to be American run? Is it going to be Chinese run? Is it going to be run by the Ether? Is it going to be run by the International Space Station? Nobody wants to agree on that. And that forces people to continue to use micropayment channels, which don't have the scalability, to put the transaction costs so low that all sides of the pyramid join in and participate. Forcing cash, which is already very utilitarian, cash is neutral. I have cash, you have cash, we can transact cash to each other. We'll pick those payments that way. So I think that's underpinning it. No global payment platform or close to global payment platform.
Well, I guess what crypto people would say to that is if we need a neutral playing ground for all of these apps to talk to each other, well, isn't crypto the solution to this? That's a credibly neutral thing. It's not run by some certain country or something like that. And I guess, 10 years ago or something like that payments was all of the rage in crypto. That's all anyone spoke about. I remember all of the news stories. You go to coindesk.com and they were all talking about how, I think when Microsoft enabled the ability to pay in Bitcoin for Xbox gift cards or something, that was like the biggest news ever. They're like, this is amazing. This is going to send us all to moon. But payments, I think, has dropped off a little bit in the crypto narrative. Yet we're clearly talking here that the problem is there is no neutral layer for payments. So why isn't crypto that neutral layer? Or are we still getting there? Or is it a work in progress? Or I don't know. What do you think?
To the moon, as we say, layer 1, layer 2, layer 3. Crypto, it was all the rage. And I remember Stellar and I remember Ripple pinning their entire future on being the first to be that global payment platform, trying to sign up as many companies as possible. Each company, Stellar and Ripple, tried a different strategy to say, we'll tokenize the payment layer in between intermediary A and intermediary B, or beneficiary and sender, and in such a way that you don't have to worry about whether you use the dollar, the euro, or any other currency to work. They've had numerous problems getting scalability and recognition. You could just name a few off the top of my head. The variability in pricing, because Stellar and Ripple are not fixed. They still have some volatility. So when you do a transaction, how do you guarantee that the recipient is going to receive the entire value? They've been beset with technology issues, also beset with some regulatory issues as well. I think the SEC has been going after Ripple for quite a while, saying it's an unregistered security. So it's forced their hand to remain somewhat under the, not say the radar, but not being able to become as widespread. And those were the two things that we initially thought were going to be very big. I recall Stellar, I think maybe even Ripple signed an agreement. No, Stellar, sorry. They signed an agreement with MoneyGram. Oh, great. All MoneyGram is going to be running on the Stellar platform. That hasn't quite happened yet. So they've struggled to become that payment platform. And without their success, it has prevented other entrepreneurs from really making the investments necessary. Because someone has to forge a path. It's a bit better mousetrap. And if I'm going to go raise money to build a global payments platform that's unhinged on crypto, I need to be able to point to my investors and say, look, Stellar's tried this and it hasn't been successful, but I can do better than Stellar. So give me some, X millions of dollars to back it. But when Stellar hasn't even gone anywhere successful, it's not a good case for me to go and ask for money to build a better mousetrap. They say, well, it's not catching many mice anyway, so what are you trying to do? So I think that's kind of where we've seen that struggle. Has Stellar and Ripple been able to succeed early and maybe become very big and very unwieldy like Western Union had been in our space, which is what forced so much. Let's just step back for a second. In the traditional remittance spaces, Western Union and MoneyGram dominated for decades, if not centuries, right? And they had high fees, poor customer service, inflexible transmission dates. It could take you 5 days to receive your funds. Everything was just the way it is, and you couldn't do anything with it. It finally spawned innovation. You could start with TransferWise, or back then it was, Wise, sorry, for TransferWise. Remitly, a whole bunch of other platforms came out to show that you can do a remittance cheaper, faster, and better than Western Union. And that just lots of investor money came pouring in to give those first guys first mover advantage, right? And they've taken significant chunks of business from Western Union and MoneyGram and made that a little more efficient, more price sensitive, and giving you more options. Crypto hasn't been able to follow suit because while there has been a proliferation of different tokens and different payment mechanisms, there has not been that proliferation of payment standards or payment-focused crypto companies to forge a path to building more competition and to building more efficiency in the system. And I think, again, we have time on this podcast. We can delve into some of those specific reasons as to why that hasn't happened. But to answer your original question, I think crypto has an opportunity to have been a payments platform, but the failures of Ripple and Stellar to really forge a path early on probably has led to a letdown between investor expectations and entrepreneurs saying, where's my wisest use of my time? Maybe I should be doing Web 2, I should be doing Web 3. Other things have come up that are climate, there's so many more other options for smart entrepreneurs in the crypto space to go into, and leaving payments somewhat barefoot of innovation and spark.
Yeah, look, I think that's a great overview of things. And so you mentioned XRP and Ripple and Stellar and some of the pricing problems that they were having. I think also we can talk about the last mile problem as well, right? So for XRP to be viable for payments, like it would be great if we lived in a world where, I could buy some apples on the side of the street denominated in XRP or something, right? Or some sort of crypto coin. But right now we don't exist in that world. So if apples are still denominated in the local fiat currency, then ultimately that's going to dictate that the payments do need to be converted into that local fiat at some stage, right? And
yes,
correct me if I'm wrong, the issue you were mentioning there about, Ripple and pricing differences and that is that there needs to be an XRP to the local fiat market in all of these different places, right? So ultimately, Ripple is not just building a coin and, some sort of database for banks and that sort of thing. They actually have to think about, well, now we need exchanges, now we need liquidity, now we need people that actually want to buy the coin at a spread that's like less than 0.5% or something, right? And that's a massive problem, which is actually a way bigger problem to tackle. So what can we do here? Are we just going to sit around and wait until I can buy my apples denominated in XRP? Or is there some other step which they missed along the way and other guys perhaps are now, can pursue that? Or did they do something wrong?
Yeah, I think they missed something. I mean, I can't speak with all confidence because I wasn't in the boardrooms. I've not sat in the executive management meetings for years as Stellar and Ripple. But I can definitely say the early focus in the crypto were focused around first world markets. Payments is not a first world market problem. Payments an emerging market world problem. We're talking about India, we're talking about Vietnam, Nigeria. These are emerging markets issues. And Stellar and Ripple's initial focus was on trying to harness remittance companies and or banks, financial institutions in rich world countries to make their transactions faster than SWIFT. So saying, look, SWIFT is very clunky, SWIFT is very antiquated, it was born out of the 50s. You use our tokens and you can interact with each other and do more real-time payments. That was a strategy. It may have made sense on a PowerPoint, but in rolling it out, it totally excluded multiples of hundreds of millions of people in emerging markets from thinking of crypto as a payments opportunity, right? The first and early movers in our crypto space were very much more Western first layer countries, like countries where we're from, the United States and Australia and Hong Kong, those markets where people realize we don't need this as much. So we're not going to give you much of a margin or incentive to scale. If you can't price my product with a decent enough margin to give me a return, then in return, I will ask for volume. You get neither in a market like the United States where with payments, there's so many easy, convenient payments. There's Visa, there's MasterCard, there's Discover, there's a whole proliferation of payment cards, there's a whole proliferation of even basics check. So I think that's kind of where you look at it. You've got to focus on emerging markets. And then when you look at emerging markets, you said earlier, on and off ramps are very difficult. That last mile is the first mile and the last mile. I want to use crypto as a payment. I want to send a payment across the border between the Democratic Republic of Congo and Congo, Brazzaville, which are just two countries that sit apart with a river in between them. I got to go buy the crypto. That's an on-ramp, first mile, problem. Then I've got to convert that crypto onto my phone and send it via a wallet, which is near instantaneous speed. If you're running on Solana, it doesn't cost you anything. Wonderful. So my recipient has finally got the crypto on the other side of the border, which is literally 10 minutes away across, it's kind of a little boat ride. You can swim across the river. Then he has to go off-ramp it, last mile, in order to use it. Because we haven't got scale of merchants. We definitely don't have scale or any sort of visibility on payment rails beyond an off-ramp. I can't just take my crypto and go buy groceries, pay my rent, settle on insurance, or pay my taxes. Can't do any of that. And that still is so far from happening because, as all of us who are in the crypto space know, we don't really do well with governments right now. So we don't do well with governments. We're not doing very well with the merchants who need government approval to accept crypto because it's not legal tender. So those are issues that make payments via crypto still very much in the infancy of what it potentially can be. We need a really strong test case or somebody that will embed us. So we were hoping Amazon years ago would be that, allow us to accept crypto. They haven't done it, may never do it. You need a merchant who will accept crypto. That will really spur innovation in payments because that merchant will be where people can at least transact their crypto for usable, tradable goods right now.
That's a really good point. So in that example about DRC, that kind of means that, okay, if there's on and off ramps, in and out of Congo or wherever else, that means that we need local exchanges, right? So then that's another problem is, okay, is everyone just going to go and set up a crypto exchange in all of these parts of the world? And even if you do, how many people are going to use it that there's enough liquidity to do that, right? Like if only 10 people are on the DRC crypto exchange, well, I can't really use it to send payments, right? Because I have a guy asking me, he wants to do $1 million, in and out, and there's only $10 on the exchange. And we've seen this problem many times, right? So I guess, well, it's kind of a chicken and the egg, isn't it? Because there's the merchant that you were mentioning, like it would be great if I could go and get money out by walking down the street and go and meeting the guy at the shop and he accepts crypto and I can get money in and out. But he's not going to accept crypto if he can't go and buy his apples, for crypto as well, because I give him crypto and then what's he going to do with it? There's no local exchange, so literally can't do anything with it. So either A, he needs some offshore account somewhere, which it's not like everyone in the world has that, or B, like there needs to be some sort of local exchange. So maybe we need to be thinking further back in the supply chain, right? So maybe it's a case of, I know something that we were talking about quite a lot before is like these sort of B2B payments of, I want to buy a fridge from China, right? And the merchant might be cool with accepting crypto if he's also buying fridges from China and he can use that crypto to go and buy a fridge from China. So really, you onboard the one merchant who does fridges in China, and then that guy in DRC is now perhaps more likely to accept crypto. I don't know. Is this sort of workflow of how to think about some of the problems in payments, is that the right way to think about it, or other areas which Ripple and Stellar have? I remember Stellar. Geez, they're still going strong. Still there. Like, are there other things? Because, they're just building this infrastructure. They're not thinking about these other problems, I don't think. Or maybe, they probably are, but it's like their hands are tied.
Their hands are tied and the problems are intractable. So if you spend your time exactly as we just discussed it and laid out, it'll blow your mind. The permutations are infinite, right? How do I set up local exchanges for?
It's so fun doing this kind of stuff as well. Kunbi's the right guy to talk to.
It does get my competitive juices flowing because how do we solve these problems? And I've taken an approach that yes, it's relatively impossible to have local liquidity in so many emerging markets, which is why Stellar and Ripple may have started with just the dollar, the euro markets because they need this liquidity. I can find OTC merchants who would take my token and give me currency. But then there's just no mass adoption because, trade between those two markets is so efficient. I don't need to go to Stellar to be able to make payments to a manufacturer in Germany if I'm in the United States. I can do it very, very easily via my bank or now with a whole host of intermediary fintechs who will make that payment for me. But when you take that example back to the emerging markets, like I said, let's take two things. Focus on B2B and not retail. I'm sorry. All you got mom and pop guys, I really apologize, but we have to give B2B credence because they have flow. And they're more willing to take the risk because for them, every dime saved is a dime profited as they resell their product because they're buying and selling. They're buying cheap from emerging manufacturing markets like China, Vietnam, India, and they're selling slightly more expensive in markets like Nigeria, Kenya, Argentina, maybe even Turkey, if you use that example. Focus on B2B and then also try to focus on, in those B2B markets, which countries? Can't be many. You got to focus on depth and size and trading channels with each other. So I mentioned 4 already, and I used Nigeria. I forgot to say Turkey, but Nigeria, Turkey, Argentina, and Vietnam are my 4 use cases. There's trade between those 4 countries. There is trade within those 4 countries, as I mentioned, or trade with the border countries around them that you can use crypto to facilitate payments. And you have merchants in those markets who are extremely savvy because they've been operating under hundreds of years of poor economic policies / very, very hungry markets for foreign goods. Whether it's you go back to Turkey 250 years ago or 300 years ago, they were part of the spice trade that ran through Constantinople and through Europe. Spices came through to the souk, gold and spices. Nigeria has always been a focal point in Africa trade, whether it's in soft and hard commodities, whether it's agribusinesses. Argentina in Latin America has always been an innovative market for cattle, beef products, and agriculture, as well as mining products as well. And then Vietnam, proximity to China as well, a secondary manufacturing hub. These are markets where when you go there, you want to create a payment infrastructure around crypto. You have a willing audience, receptive audience to listen to your pitch, and you're solving an existing problem because they're not entirely mainstream to the TradFi business. So they themselves, when they come into using payment rails by established banks, they're charging a premium for their access to get there. And so they're willing to consider alternatives. And they don't necessarily get the best customer service either because people are like, well, your trade is a layer below Euro trade or US dollar trade, so I'm not going to give you as much credence when it comes to processing your payment. So I think solving the problem from my point of view is focusing on smaller markets than the bigger markets, Euro and US dollar market, and then narrowing it down to certain type of countries that have similar dynamics and would adopt crypto without less of a prove it to me, use it kind of attitude, which I see in the Western environments. Prove it first to me if I'm in the United States. Tell me why I need to use it. And consistently, I will not guarantee that I'll use it because even after they prove it, I still have other alternatives.
Yeah, and I guess maybe one thing that has changed in the last, say, 5 years is perhaps not something which Ripple and Stellar have, I don't know if they've adopted or tried to work around, but it's the emergence of stablecoins as well, right? And I think that's been a big step towards helping us solve this problem. Like when we were here recently in Turkey, you can walk down the street and you can see Bitcoin OTC shops and crypto OTC shops. They almost all exclusively only accept Tether. And you can do other coins at it, but Tether makes more sense because, there's one rate and it is what it is, right? So, and also people understand what a US dollar is, whereas maybe it's a little bit more difficult to understand what a Sol is or a Bitcoin or something like that. So is there a role for stablecoins in solving this problem? And if so, how would that work for that example we spoke about earlier for DRC, and let's say they're a business and they want to buy something from somewhere else? Is it maybe better to just use stablecoins for that rather than, something like a Ripple coin?
Stablecoins are, in my opinion, the godsend. When I first started in payments in the crypto space, we were using BTC. It did not work. BTC has always been volatile. It doesn't matter whether it's BTC at $1 or BTC at $69,000. It's always got volatility. And it's almost impossible to build hedging products for BTC. We tried to come up with very exotic hedging. So we said, and also before the forking of the different BTC chains, it was still time consuming to send the BTC across. It wasn't instantaneous. It took minutes sometimes to get confirmation. And in that time between sending to confirmation and the prices moved couple of basis points, what do you do? And if you're doing hundreds of thousands of transactions, which is what you want to do to scale for payments, it didn't work.
And also just quickly, sorry, on that point, is that hedging BTC back in the day, it wasn't just a USD problem. In what we're talking about, it's in other sorts of currencies. I remember when we were looking at hedging BTC in Indonesian rupiah.
Yeah.
And it's okay, cool. What are you going to do? There is no BitMEX for Indonesian rupiah. Mm-hmm. So people will be jumping out when they're listening to this going, actually, you could hedge on X or Y product. Cool, bro. That's in US dollars. It's not in the current remittance flows that we're talking about, whether it's Turkish lira to whatever it is, Nigerian naira, something like that.
Exactly. So there was just no market makers in these emerging currencies to provide those sort of hedging tools. So you're hedging in such a way that it's counterproductive. If you hedge your BTC in dollar, that has to be then converted to lira back to naira, it's a total not a hedge. It's just an additional complicated leg in an incomplete process. And so lacking hedging products, you couldn't use BTC. So stablecoins arrival, and let's use USDT, wasn't the first stablecoin, but they become the most popular early on. I think I've got to go back and check my history books, but it wasn't USDT. It was DAI. It was not DAI, but George, you may join my memory there. But the advent of stablecoins in 2017 and 2016 really were a game changer. And again, like many other things in crypto, people are like, well, what is a stablecoin meant to use? I want to see price appreciation. I don't care about stablecoins. I don't care about payments. But I think, and I give Web2 and I give DeFi credit. DeFi really popularized stablecoins because rewards and entry point into DeFi, you need to be a stablecoin. And that was, I think it was key to real mass adoption of stablecoins by every uninitiated and initiated user in crypto space. I think the vast majority of users of USDT Tether in both Turkey, the bazaars that we went into Turkey, they don't understand the underlying technology. They couldn't even explain the different wallet addresses between Ethereum, Solana, Cardano, any of the chains that carry USDT. All they understand is US dollar digital. And that's exactly what we've always preached about crypto. You don't need to understand the technology. You just need to trust that it works. Trust, like in a trust environment. And I think that has really changed the dynamic because those markets adopted it because they saw how many people needed to use USDT to get onto whether it's STEP, whether it's to get into Orca, whether it's to get into Radium, whether it's to participate in bounties and everything else. And I think that changed widespread view on stablecoins. Of course, we've seen some of that on the negative side with Luna and some lesser extent NAIR's USN, some of these other failed stablecoins. But, this is what it is in the crypto space.
Is this solving the problem for the merchant though? All of this kind of stuff. Like, I guess we're still back to this problem of how do we solve for that guy who wants to buy a fridge somewhere and does stablecoins solve his problem?
It does.
And yeah, he can go and do this other stuff. How does it do that?
He does. He goes to the bazaar and he takes his cash, his lira, and he buys USDT. He goes to his wallet, then he connects with his payment provider who says, I can purchase your refrigerators in bulk, whether it's 10, 20 to 100 and 150 from these 5 manufacturers in China and Vietnam who you don't know. Some maybe accept stablecoins or they accept a variation of stablecoins.
Far more likely to accept stablecoins than, any other random coin, right?
Exactly. They're definitely far more likely because they don't want to deal with the volatility of ramping that. In fact, people are willing to save some of their revenue in stablecoins because if I'm making $100,000, I can keep $2,000 in stablecoins just because it's a little more convenient because there are other people I deal with who have stablecoin interests as well. So that purchaser in Turkey of refrigerators from a manufacturer in Vietnam can make that transaction with a simple cash purchase of stablecoins in Turkey and then from his wallet directly sending it to his exporter in Vietnam who will ship him the refrigerators. There's no need for any letter of credit to confirm. Any of the trade finance requirements for that sort of transaction are not there because the recipient in Vietnam trusts the USDT. He doesn't have to be fooled. What happens is this. I can tell you have a bank account in Turkey and I can show you on a piece of paper, so I can digitally scan it and send you that shows I have $100,000. I can even go to my bank in Turkey and they will guarantee to your bank in Vietnam that I sent $100,000. Until you see the $100,000 in escrow in your bank account in Vietnam, it could take 3, 5, 7 days. You don't release that shipment of refrigerators. And that's the problem with traditional trade finance that crosses borders. Lack of trust between even banking partners.
Yep.
You now change that whole paradigm and say, look, I have USDT. I'm shipping it to you in 10 seconds. It's confirmed. It's in your wallet. Guy's got in 10 seconds. He's shipping the refrigerators out to you. That has been what's going on. It hasn't taken over global trade finance. Global trade is in the trillions of dollars an hour, not even per day. We're not even doing 0.1% yet of that trade. But there are certain markets where you can see $1 million transactions or multi-million-dollar transactions going by stablecoins just based on this premise. Sent to the wallet of the recipient company, they confirm it, and they're shipping out the product same day or next day max. That is what we're trying to get to Holy Grail.
That's a really good example and use case of it. So I guess from your experience, you've run for many years remittances and remittance companies that are sending predominantly to West Africa, correct me if I'm wrong, but so you understand a little bit of the flows there. Maybe you can talk a little bit about what are people wanting to buy in some of these trades? We've used the example of refrigerators, but is that a good business? Is there 10 guys doing it or is there, hundreds, if not thousands that are looking to do it? And how problematic is that right now? So I'm some guy in Lagos and I have a small business and I want to buy something from another country. Can I do that easily?
In Lagos, yeah, you can. If you just make one phone call to ask somebody who's done it before. In emerging markets, importers are not infinite. It usually follows the bigger the better and the better. The bigger importer has scale and there are smaller importers beneath him. It may in fact wait for him to import and it'll wholesale from him into their own warehouses or storage spaces. So you're not looking at thousands of importers. You're looking at usually hundreds of importers. And once the biggest guy or biggest guys in that fish pond start using stablecoins, as we've explained, then everybody just jumps onto it. And I think in Lagos, that was the case over the last 3 or 4 years. 3 or 4 years ago, there was skepticism around stablecoins and skepticism of this use case. I can't spot to who started doing this, but all of a sudden, everybody started willingly taking stablecoin as a use case for importation. They haven't eliminated their banking at all, but it has opened up their ability to hit other exporters in other markets to say, yeah, we'll take stablecoins from you. If you're willing to do that. In some cases, we'll give you a slight discount for that stablecoin. Everybody looks for a discount. So I think that's sort of the little nuances that change. Somebody big in the food chain, at the top of the food chain, started using stablecoins, or some of the people that work for that person started asking for stablecoins to support transactions, and the rest of the market picked up on it, and so it's easy. But where you ask, like, what other industries in that import-export, pharmaceuticals, stuff like, aspirin and common over-the-counter medication have become quite in demand because people want to save money. They're not trying to buy these generic drugs from Western or more IP-driven companies. They're trying to buy it from India. India is the world's largest exporter of generic drugs.
Oh, wow. I didn't know that.
It's India. Everything hits India and they mass produce it in quantity. And Indian payment providers, they don't necessarily take stablecoins, but they're willing to take a stablecoin into a dollar conversion on their end. And so all of a sudden, if you're running a pharmacy store or in the British term, a chemist or whatever, and you are not necessarily in the hub of Nigeria. Let's say you're not in Istanbul, you're in Antilla or in Ankara, where your banks are a little less slow and everybody's a little less efficient. You go to your OTC counter in that market, buy your stablecoin, and you get in touch with the exporter in India who will take the stablecoin off you. I'm simplifying a lot. It's not entirely that they would take stablecoins off you, but you'll have intermediaries who take that stablecoins and get to the manufacturer in India, pay them in dollars. All can be done in the same time zone, same day transaction. And you've eliminated the reason to go to Istanbul or to Lagos to do the transaction.
Right. And is that something that you're seeing in your business? Like, have you seen people wanting to interact with crypto and use it for these kind of payments?
We have seen people wanting to onboard with crypto, particularly versus offboard. So the importer knows he has local currency and he knows that he cannot just take that local currency to a traditional high street bank, deposit it and get fungible US dollars. He will take that USDT that he can get. He'll then give it to you and say, look, you payment processor, I don't know how you do it, but here's my banking details of my exporter. Pay him. I've seen once or twice where I've seen invoices where they actually list the wallet address for recipient, but it's rare.
That's pretty cool.
Yeah, it's pretty cool. Yeah, when it's like, whoa, that's high. Most of the cases, the recipient knows that you are doing some sort of last mile connection for them. You're taking that USDT or USDC, converting it into dollars or Vietnamese dong or Indian rupees and sending it to them. But they're totally comfortable with that. They don't need a letter of confirmation in that transaction. They're comfortable that they're going to receive the funds very, very shortly and will willingly release the payment. So that's becoming quite a part of the market. It's not the dominant part, and probably will not be because the markets are really big, but at least in Nigeria, which I can speak credibly for, at least in India, another market that I spend a significant amount of time, there are quite a few people. I've heard rumors, I haven't yet validated them, that there's a ring of car importers and exporters between South India, Thailand, and Cambodia that trade entirely in crypto. I've heard rumors about this. They're like the holy
Let's go.
They use crypto entirely. Buy and sell. They strip the cars, parts, and export cars between these three markets, all in crypto. I'm trying to find those guys. If you know who they are, let me know. Go find them.
That's awesome. We'll go find them. I mean, to get our podcast produced, this thing right here, we're paying an intermediary that converts the crypto coins into like a last mile payment in the banking system. So we're an example of that as well. So I think like these use cases are growing and, we do start to see them now and we didn't see that like 5 years ago, right? So I guess looking forward, we're in 2023, we're just in April now. So we're in the future. What do we want to see happen for the rest of this year? Maybe specifically for payments, or what do you think is necessary to solve some of these cross-border problems? And I think it's really cool that we focused on the B2B kind of stuff, but the consumer kind of things, like earlier I mentioned Solana Pay and that sort of thing, it's like, cool, I can buy a Pepsi, I can scan a QR code and I do from my wallet or whatever. But I think from our discussion, it seems like the first sort of domino that needs to fall is we need to have these sort of larger importers and these larger people that are like these hubs in various countries that are accepting coins for whatever reason. And then other people can go to them and then they can trade with them. So it's like, the example I gave earlier, it's like if the guy who wants to buy a fridge and I can buy apples from him, but his fridge manufacturer accepts USDT, then, maybe he'd be okay with me rocking up in the DRC and saying, I'll pay you in USDT. Whereas, if his manufacturer didn't, it wouldn't make sense. So I guess, what do you want to see for the rest of this year? Or what do you think is going to be happening in the future in the world of payments?
I'd love to see for the rest of this year, obviously more stability sounds like an oxymoron, but more stability in stablecoin. We saw a deep peg in USDC against USDT a few weeks ago when we had the crisis here in the United States. It doesn't help our business market when, people say, well, I had my savings in USDC and all of a sudden they were 15% was wiped out. I have to tell them, calm down, don't jump off a ledge. Give us about 24 to 72 hours. It'll probably come right back to 101, or at least very, very close to 101. So for the rest of 2023, I'd love to see less of that and just stability.
Boringness, essentially.
Boringness, yes. I'd like to see stability in our stablecoins. That would be one thing. And second thing I'd love to see would be, in Nigeria, I think that first big dominoes have fallen. More and more people are definitely adopting it in this market. We're seeing similar things happening in Kenya. South Africa is already following suit in the sense that most of the e-commerce and hospitality in Africa runs out of South Africa. If we start to see more of the merchants in this ecosystem, South Africa, accepting stablecoin, USDT, USDC, whichever, as some sort of partial or payment for services, I think you'll see a lot of ancillary servicing coming out of the Southern African axis. So I'm looking at Egypt and I'm looking at South Africa as good examples. Egypt has their own Alibaba equivalent. I forget the name of the entity in India, but I think 30% of all electronic payments in India go through one company. And they have a slew of merchants within their ecosystem like Amazon that all work within that space. If we start to see that, and Egyptian currency is very ripe for this because it's very unstable, high inflationary environment, massive mistrust by the population based on that. I think if we saw that in Egypt as well, you'd see Africa, which already is, in my opinion, the true use cases for stablecoins. Multi-millions of dollars of transactions occur every day on stablecoins in Africa on these B2B transactions. I think Egypt and South Africa are really taking more of a stance and accepting or utilizing it would really give more credence to it on the continent.
That'd be awesome. I guess it seems like, well, I know Kenya had a lot of early issues with crypto. Remember when Safaricom was going after everyone like 5-6 years ago? And I think now they've kind of changed their stance on things a little bit, but I really like that sort of focus on stablecoins being this solution that certainly for something like the Rand, the Rand has been one of the worst performing currencies for the last couple of years, right? Yep. So maybe poorly performing fiats is like the forcing function to get everyone on the crypto train. And perhaps once they're on the crypto train, they never get off. Because I can't really see a use case where, like, let's say a fintech comes along with some app. If I'm already on Tether and I'm using Tether and there's a million apps which use Tether and they're all pretty good and they will have QR codes, people understand that. They will have like contact lists and I can send to friends and that sort of thing, which is standard WeChat kind of stuff. Would I ever go back? Like, would I ever go and use some local country app which doesn't have Tether? I don't think so. So I think once people get onto the USDT bandwagon, maybe because the local currency sucks, maybe they never get off and then, that's how the crypto market grows. But that's a really cool thing to monitor. I guess we need to be watching for any announcements coming out of there. So look, we're almost out of time, but where can people find out more about you, Kunbi, if they want to connect, or websites that they should check out? Where are you at on the internet?
We have a website. It's called swap.bitsa. So swap.bitssa.com. That's where you can actually do some of the swaps I just mentioned with your stablecoins into fiat currency. Generally between $0 and $5 and $500 amounts are swappable on our site. If they want to contact me personally, my Telegram handle, you can find us at Twitter as well, on Swap Bitssa on Telegram. Hit us up on Telegram and Twitter as well. So Swap Bitssa, all one word, Telegram and Bits and Twitter. And we'll be able to share more about our feelings and our findings in stablecoins. But yeah, I'm passionate about stablecoins. I'm really passionate about you having me on this podcast, George. We've got to thank you again. It's such an engaging conversation. I think you and I could go on for hours and hours and hours.
Yeah.
Many topics, not just on payments as well in the crypto space. So if I have to, please bring me back again. This is my pitch. Bring me back again anytime in the future. I'm happy to join you guys.
Of course, we'll get you back for sure, and we'll be looking for an update as well from the payment side. But look, thank you so much for coming on today, Kunbi. It's been a pleasure as always. And for anyone else out there, definitely go and check out some of those links on and off ramps. That's what's needed to bring the next billion people into crypto. People like Kunbi are making it happen. So get out there, take a look, and we'll see you all next time. Thank you.
Thank you, everybody.